Hi, this is James Shug with Westpac London's end of day report for Monday the 25th of March. Well, what started off as a risk on day following the late night bailout deal for Cyprus that was reached between EU finance ministers, Cyprus and the ECB and the IMF, it's turned negative following comments. Well, I suppose you can probably attribute the turnaround to comments from the Dutch finance minister and head of the Eurogroup finance ministers, who said that the Cypriot deal could be seen kind of as a blueprint or a template for any future bailouts. That is, use deposits at banks to help bail out those banks if they get into difficulties, rather than expecting the rest of Europe to dig deep to fund the bailouts entirely. That's a real turnaround from last week, when the Cypriot depositor levy was cited as a unique case, and markets were right, it seems, perhaps to price in contagion into other markets. So as things stand, we've got the bailout for Cyprus, 10 billion loan from the EU, the IMF likely to contribute as well, representing about 60% of GDP, on top of the government debt, which is already worth about 90% of GDP for Cyprus. So you're looking at 140% of GDP debt to GDP ratio there, which probably won't prove to be the peak, because Cyprus is looking at multiple years of recession ahead, rising unemployment and so on, which means that the ultimate growth trajectory will deliver an even higher debt to GDP ratio than is currently being bandied around in semi-official comments. Look, this is just like the Greek situation. We'll see Cyprus and its bailout revisited, no doubt, before too long. One day we'll see Cypriot debt simply have to be written off by the creditor nations, as indeed we think will be the case for Greece. On the data front today, we had the Dallas Fed Factory Index. It was stronger in March. In fact, its highest reading since the first quarter of last year. That series, like so many others in America, is showing sort of a tendency to do well at the start of the year and then fall away at the middle of the year. We think that's related to distorted seasonal factors. We saw unchanged house prices on the home track measure. It's the first non-negative reading there on an annual basis since 2010. That's really about it. Weak mortgage lending figures from the Bankers Association here in the UK too, for the month of February. So markets were in positive territory earlier on, but heading into the London close, we've got the FTSE unchanged. We've got the French market down 1%, a 0.5% loss in Germany, a 2% loss, 2.2% loss actually in Spain, and Italy's down 2.2% as well. Banks leading the way in those countries, 5% plus losses, on the basis that their depositors could see their savings at risk going forward. The Dow at the moment is down around 0.5% too, reflecting this risk-off attitude. In terms of commodity markets, we've got copper prices down 0.6%. Gold is down 0.2 at $1,604 an ounce, and oil's up 0.6%. It's at $94.29 a barrel. The Aussie dollar, which was as high as 1.048 against the US dollar earlier on, back down to 1.045 at the moment. We've got the Reserve Bank Governor. He's giving a speech in Australia today. That's Tuesday. That's it for today. I'll be back again tomorrow.